You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tosaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. Welcome back to the swirling mass of chaos that is the option block. Everyone's favorite. I hope it's your favorite bi-weekly source for all things options related. Some wit, some wisdom, some analysis of what's trading, a whole bunch of unusual activity, some strategery, some of your questions. Mix it all together. You got the old OB. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. A plethora of shows for you guys to join. If you listen in live, you're saying, man, what's going on with the shows coming out differently? Why was TWIFO on Thursday? Is Option Block still the same? Yeah, Option Block's still the same for now. We are playing with the idea. Blame Uncle Mike, by the way, if you don't like this idea. Blame her toying with the idea of maybe moving Option Block earlier in the day. So let us know if you're up for that. Obviously, TWIFO might be moving from Fridays to Thursdays. So mixing things up a little bit. We just did one. So I'm straight off the futures options bandwagon. My brain's full of silver conversions. You can also blame Uncle Mike for that as well. And of course, however you listen live after the fact, however you get it, podcast form, donkey cart form, or however you get it, make sure you hit us up. Questions, comments, insights, pearls of wisdom. We do, yes, we do like to hear from you guys. And joining me on the program today, the aforementioned, much maligned Uncle Mike. Sir, it's been so long. I crave to hear your voice yet again, sir.
You know what? This is something else. I get to talk about silver conversions. I get to talk about whatever the fans vote on for the strategy block, all within a 3-hour span. I don't see how life can be that much better.
Are you starting to develop an appreciation, sir, for the big cheer? How much crazy stuff I have to talk about in a given day and be conversant in? It's crazy. Only a madman would do this for a living.
You have to know a lot of different things, that's for sure. No doubt about that.
It does get pretty broad sometimes, literally and figuratively speaking. By the way, did you give us choices for the strategy block? If so, we'll put them out there.
I did not. I mean, I saw what you had in the show notes, and I thought you were just going to repeat what it was last week, because that's what I saw in the show notes.
Oh, okay. Well, we just left those in there, but if you want to do new ones, you can. Otherwise,
yeah, I'll put a couple new ones in there. I'll have some tea and give me 1 minute.
All right, give us that, and I'll give our audience about a nice 30 minutes to vote. Meanwhile, let's go farther abroad. I haven't talked to him in a couple of days, so he doesn't get the same treatment. He is the rock lobster himself, Mr. Andrew Giovinazzi from OptionPit.com. Mr. Giovinazzi, do you also have a deep and abiding appreciation for what it is that I do day in, day out, sir?
Well, I guess if Tosaw has to have a
and remember, I have my hand on the mute button.
Since Tosaw has to have a deep and abiding appreciation, I guess I can. I mean, I can. I know. I tried to actually host the show a couple times, and it's actual work. When you're just a guest, when you're just in the you're in the guest chair, you just chime in and be witty every once in a while, or attempt to be. You don't actually have to keep the whole thing going, which it's you earn that meager paycheck you pay yourself every week, so that's not too bad.
Meager it may be, indeed. It is funny when I talk to people out there, like your buddy Dave Lincoln, who was on the Vol show, or our Volatility View show. He's doing his own show now, and Bill Valentine does some of his own show and stuff. And they always hit me up afterwards, like, "This is hard." Like, yeah, I know. Welcome to my world. It seems so easy on the other side, but it's fun. I digress. Let's keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for The Trading Block.
All right, everybody. Welcome to The Trading Block. This is the portion of the show where we talk about what the heck it is. We're trading. We're keeping an eye on what's moving, what's going on in the markets. And, it's kind of a weird day today. It seemed like we were going to kind of be mixed. Some were kind of up, some were kind of down on the day. It's kind of a bit of a mixed, kind of flat, kind of day. Another one of those out there. And then as the day kind of go on, we saw a little bit more movement to the downside. Most of the major indices closing in the red today, off around 0.5 percentage point or somewhere in that range. VIX cash taking a nice inhale, getting back almost a full handle on the day, about 0.9 of a handle. So it had a nice range of about 1180 on the downside. So we did break that 12 handle ever so briefly, and then get back up to where it was. It opened at 1220, which would be nice if it could do that tomorrow, then just stay there. So Mr. Rock Lobster, a.k.a. the crystal ball carper of all carpers, doesn't get me by a nickel on the crystal ball tomorrow on ball views. We've got another day for that to play out, closing right around the 13 handle out there in VIX cash land. And all things lighting it up. Oh, see, Uncle Mike, you submitted your ideas. I will put those. We don't have our producer in the studio right now, so I'll have to do that myself. So tell you what, why don't you hold court for a minute, Uncle Mike, on what's catching your eye while I tweet your selections out to the masses. How does that sound?
Sounds good. Sounds good. Okay, so today in the marketplace, financials were down, and looking at the sectors, we have financials XLF down 1.5%. So in looking through this. Excuse me. That is the one that I would say is, pretty much anyone would say it's the big loser on the day as to what's bringing the market down. With that, in looking at technology, it's only down roughly 0.35% on the day. XLK, that is, down 26 cents. So apparently the market is kind of recovering from some of the earnings happenings earlier in the week. My beloved Apple is up 0.8% on the day. So we do have that. And Apple earnings are coming out right now, I believe. Oh, no, they're not. Wait, you're allowed to lie about Apple earnings on this show. We're a very honest show otherwise. But when it comes to Apple earnings, we do have the culture of lying, quite frankly. But we at least admit that we lie on it. So that's a good thing. With that, we also have a lot of things happening on the macro level. We have Trump saying that he would expect the Russians to have colluded, but he misspoke. He said he would not have expected, or did he say would or would not have? I don't know. But either way, it was something different that is happening. In the metal world, with a rising dollar and the expectation of rising interest rates, we have had a shellacking in the metals. So something to check out on that. For more information on that, I'll give a shameless plug to Mr. Longo's other show, TWIFO, This Week in Futures Options. We had a very lengthy discussion on that a couple hours ago, but definitely check it out. It was actually a lot of fun doing the show earlier with that, so not going to double dip on that topic, but a lot of things going on the macro level. We're in the midst of earnings season, so a lot to talk about today, to say the least.
All right, and your tweet is about to go live. But before we do that, we toss it over to the Rock Lobster, who also should similarly hold court for a few minutes while I finalize Uncle Mike's strategy block tweet, sir.
So I get to talk all by myself about the market and volatility, which I guess I can do. And you know what? Just to make Longo happy, because it's Thursday and it's option block day, and I'm going to do what he wants today. So what do we have? We actually had a market that wanted to get back to green on the day. Volatility wanted to get back, but I think Congress did a little trade, passed a little trade stuff that made it a little more restrictive, or they're attempting to. VIX cash up a point. The SPX down 0.5 point, or trading 12 vol. So that's, not unreasonable. Just kind of moving down the curve. Still in zone one. We're trading it right once it breaks out of that 12 vol. So while vol is up a lot, we didn't break, or VIX is up to the end of zone one. It wasn't enough. So to me, trading VIX is anytime you bust a zone, that's when you really care. The volatility is a lot more fun to trade when it's actually moving. So when it doesn't move, it's a different kind of trade. So I would say we were slightly responsive to the market, and ultimately I think we're just waiting for a lot of tech. All the bank earnings were good. That is a known already. The market doesn't, we had some interest rate chit chat today. I think Trump doesn't want interest rates to go up. What president does? So the banks were down, which weighed on things. Probably a little buying opportunity, if I would think. Vol in there super low in all of the banks. It's at year lows right now. So if you're worried about any kind of issue, any kind of bank issue, any kind of financial issue, I think could be a trade there. As far as maybe buying some being long banks and being long, let's say, puts in China, something like that. You could certainly put together some kind of trade like that, or a pair trade to let things sort of go. That is, I think, one thing. And the next thing is looking at kind of the old retailers, Best Buy, Costco. They were doing okay, and Amazon not as good, but kind of the old school retailers. Walmart. Walmart wasn't up on the day, but a few of the other retailers were. So I'm thinking, let's see how retail is, and how all that is going to play out. Mostly since Amazon, something we discussed today, or Mark in our little chat room, maybe Amazon is starting to get too big as the retailer of everything.
Heresy, sir. How dare you say such things?
I know. That's anti-American, So ultimately, we'll see how all that plays out. But you look at something like Costco that sold off hugely last summer on the getting Amazoned by buying Whole Foods. And it's funny is I don't think you go to Whole Foods for, your organic pate. You don't necessarily go to Costco for that unless you want a bucket of it. So I think it's also, and then my closet pick for the year is I'm trying to get long as Walgreens as I can, because I think it's the same thing. I don't think anybody's going to stop going to their corner Walgreens store. Right. So they're going to go order online, some lipstick or something. I just don't get it. I think it's a buying opportunity for that stock. So that's one of my favorites right now. That's certainly non-tech, but and Walmart for that matter. But I think that story, maybe we do see some kind of antitrust for Amazon. I am not going to put it by the sitting president right now that the guy that owns Amazon, who's the richest guy in the world, which probably Trump's a little jealous of, also owns the Washington Post that constantly pounds on him every day. So it won't surprise me. I'm just going to say it's in the realm of possibility that the Justice Department could get interested in the retail practices of Amazon. I'm not saying, that it's going to happen, and I don't believe necessarily in conspiracies or anything like that. It could happen. And then we'll see what happens to Amazon's lofty valuation at that point.
Are you saying this president has more personal motivations than perhaps prior administrations to look into such things?
Possibly. And the other surprise was IWM. IWM was strong, even with banks a little lower today. So I think that might be minerals, and maybe a little whiff of the inflation. But even gold wasn't up. So it was just let's just call it what it is. It's a day of oddball summertime trading. Maybe just everybody's at the beach and they don't care. So, but that's what we got.
Oddball, indeed. You're talking about the dominance of Amazon, just how big it is. Interesting chart. I think we got to put it out if it was StockTwits or Market Watch, but it came out of Ritz-Holtz, easy for me to say, wealth management they put together. Just looking at the dominance and how dominant tech is. Looking at the S&P, breaking it down by market cap. The top 5 of the S&P, so you got your Apples, your Amazons, your Alphabets, your Microsofts, and your Facebook. Add them up. They equate to what is the number here? About almost $4.1 trillion in market cap. You add up the bottom 282 companies, so that you got Wynn Resorts in there, you got Raymond James Financial in there, Noble Energy, E-Trade Financial. So some names you've actually heard of, Kohl's, a bunch of other little ones, and SIBO's in that mix. You add them all up together, the bottom 282, the S&P 500, and they're worth about 4.1 trillion as well. So they're pretty much equal to your Apples, Amazons, Microsofts, Alphabets, and Facebooks. So just put that in your pipe and smoke it. And you look at this chart, we'll be included in the show notes. The chart puts it all in perspective from Ritz-Holtz, which is kind of easy. Speaking of Microsoft, they're on the docket. They're up today here. Next up in our earnings palooza. It is so fun to just focus on earnings for a change. Let's let the macro be where it is for a little bit as we look at other things. Besides, by the way, surprisingly, Amazon rallied post Prime Day. It did sell off eventually, but it was down on Prime Day for God's sakes, and yet they still somehow managed to spin it that it was a good thing for them. Looking out here today, Microsoft after the bell, they're closed today about 104 and a half. So pretty much off about, not quite 1%, about 0.7%, right around the 100 level or so out here today. They're pricing in a little bit shy of $4, about 370, so right about 3.5% in terms of movement. And so far here in the after hours, looks like we got a little bit of a pop here, up about half a handle out here in the after hours. Not a huge, actually, yeah, about 0.75 of a point, up about 0.7%. Worth noting, by the way, you guys who love earnings analysis, I know there's a bunch of you out there. Our buddies over there at ORATS are doing a lot of great free earnings analysis for you guys. You can get it on our site, The Options Insider. You can go over to the orats.com blog and get it there as well. They're calling it their earnings move reports. And they do a lot of stuff. They talk about how much the straddle's pricing in. Obviously, they start there, but they add a bunch of other stuff. I'm looking here at Microsoft right now. They had it right around the $3.50 for the straddle, which is pretty much right where it's still kind of where it is. Looking at past straddle was averaged right around 428, so this is about 70 odd cents cheaper than previous straddles. So the historical projected move, which is let's see, all these things are the projected move in the past, obviously for Softy here, was about $3.56, what they were pricing in the past. Past actual moves, how much they actually moved, about 4.25. So pretty much almost exactly in line with the past straddle price average. So the straddle price has actually been pretty close. Not that one blowout quarter, obviously notwithstanding. The same quarter move. So looking back at this same quarter in the last 4 years or so, it's moved about 390. So a little bit more than what they're pricing in right now. Over the past year, the past calendar year, it's moved average of $2.50. So interesting stuff. They're saying it's kind of in line, a little bit juicy in there. So you can go look at these reports for Microsoft, GE. They've done a ton of names. Stuff's all free. It's crazy. So head on over to the website. You can get it there, or get on over to the ORATS blog, ORATS.blog. If you're trading earnings and looking at the poll results, a lot of you guys are, then get on out there and take a look at this stuff, because it's interesting and or crazy, which depending on your viewpoint. But either way, it'll inform you. I mean, for so long, there really was no good data on option straddles around earnings. There was a Goldman study from like 5 years ago. That's kind of about it. And now the ORATS folks kind enough to do all that number crunching for you and put it out for free. That's crazy. They could sell that stuff. All right, look back really quickly to another big name that was popping off as we'll keep an eye on Microsoft here. Earlier this week was Netflix. Talked about it on our last show. They had some, shall we say, underwhelming results. I guess the entire planet can't be Netflix subscribers all at once. It just doesn't work out that well. So they had some underwhelming numbers. They're pricing in they closed about $400 right around earnings. They're pricing in about $35, so about a 9% move. They opened down about 350, 347 or so. So they moved, shall we say, a little bit more, about 50 odd handles. Remember, they were trading down in the after hours during the show as well. They rallied a bit yesterday and sold off another 3% today, right around off 11 handles, closing right around 364. So actually, right now, where they're closing today, they're pretty much almost exactly in line with that straddle move. So if you long premium, you had a little bit of a nice kick there. If you were held on to it, you still did all right in terms of today, going up right about 365. Coming into today's action. By the way, it's always amazing to me. I look at the numbers here, some core operating metrics, how much they spend on content, what they call content obligations. What, $18.4 billion at through June of 2018 here for Netflix. That's just crazy. When the revenue of about $3.8 billion. How much they actually keep? Oh, about $384 million. So what was that? About 1%. It's not about 10%. Not exactly impressive how much they actually keep out of all that money they spend. It's kind of interesting, but again, that's how they keep growing subscribers, at least until this time. A lot to sink our teeth into there. Also got our old buddy, the old Teslas coming up. So let's get into that with a little bit of the old odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, that music, that funky tune means it's time for the funky portion of the show, where the Rock Lobster and I go through a journey through the darker side of the options world. It's time for the Odd Block. We'll kick things off as we are wont to do here on this segment, looking at some of the weirder stuff, like out here in the Tesla land. Tesla finishing off today right around 320 even, off about 360 or so, a little more than 1%. Another day, another 1% move for Tesla. Kind of nothing. It's noise at this point. We're going to look a little bit farther out instead, as we like to do here, to the Jan 2019 50 puts. See if they're lighting it up. These things coming off a little bit. They're trading 70 cents at 84 right now. They were just $1 not too long ago. They were on nearly $3 not too long before that. So that shows that old Vega effect, how that kicks in on these far, far out of the money puts. These things doing another 400 contracts today, nearly 60,000 OI, 59.5 or so from an OI perspective. So things lighting it up. Kind of that whole strip from the 50 puts kind of down, doing actually 55 puts doing $1.60 today, and all the way down 100 of the 30 puts, trading 200 nearly of the 20 puts, 144 of the 15 puts, 173 of the 10 puts. So it's like a nice little juicy put strip. Maybe these CDS folks are starting to discover some of these other put strikes as well. Either way, the entire strip, 55 on down in Jan on the put side. Fairly active today. Let's move a little bit farther out and see how we're faring a little bit farther out. Let's see, Jan 2020 50 puts. Kind of a quiet day on that front. Only a whopping 10 lot going up. Must have been the Rock Lobster today, dipping his toes in those waters. They're trading about 360 at 390. 22K on the OI, so pretty meaty there as well. 24 of the 20 puts also going up. Maybe a little bit of a 1x2 going up there. 10, 50, 20 1x2s. Either way, it is impressive to see just how much paper is going up on these. Mr. Rock Lobster, was that 10 lot? Was that finally you dipping your toe in these waters, sir?
You mean, was the Carbon Line Ultra Secret Fund looking at that? I would say no, it wasn't me, unfortunately. As much as I would have liked to give it a shot.
I can't think of a better trade for the Carbon Line Ultra Secret Fund than the mystery Tesla puts.
You know what? And I just read an article about their new Model 3, their Model 3 performance car. As the future of automobiles. So it was pretty bullish article on the car by the guy that writes for Cars in the Wall Street Journal. So
really, Tesla hyping a new car? I'm stunned.
I know, isn't it a surprise?
You've just slapped me in the face with a cold cup of coffee, sir. Hey, Mr. Rock Lobster, if you think back to last show, was there kind of a theme to the odd block? You remember what that was?
It was like the $1 spread. Wasn't there a lot of $1 spreads?
Yes, those $1 spreads. Remember where they were part of? They were part of a larger trade.
Yes, yeah, the $1 spread with a put, I think.
Yeah,
right?
So they're essentially bullish risk reversals, right?
Yes,
we got more of that going up today. I hope you weren't tired of that. Not quite as tight on the upside vertical though. Not quite as tight. So maybe this one will leave you wanting. We shall see. Kicking things off in Discovery Inc. Ticker symbol DISCA. Got a nice five handler there. Closing today, 26.69, up about 0.5%, a little bit shy of that out there. It's the name that does, about 2,300 contracts a day. Today doing 30,694, nearly 3-to-1 calls over puts. A little bit balanced there, though, because there are some puts going up with some calls. It's like a nice little bullish risk reversal going up here. Again, in DISCA, we saw this morning, 7,500. The AUG 25 puts going up on the bid for 45 cents against the AUG 27.5 30 vertical, so a little bit wider than a buck, Mr. Rock Lobster. Sorry to disappoint you. That also going up 7,500 times, doing it for, we got 90 cents on the calls. Looks like paper probably buying those. Yeah, actually lifting the offer on those. And then coming around selling the 30s, doing the whole thing, looks like for about 73 cents. So 73 cents minus the put. You got a nice 28-cent spread there for you on the bullish risk reversal side. Worth noting, let's look at the OI here. There is OI on all these strikes, but nowhere near enough to cover it. About 2,400 on the puts and about 2,700 on the 30 calls. Possibly they're piling in a little bit, but probably looks like more. And there's nothing to speak of on the 27.5. So clearly today's paper was opening whichever way the OI was leaning in the past. And speaking of the past, let's look at the chart and see what the heck's going on here in Discovery Inc. This is, of course, formerly Discovery Communications, so not Discover Card. These are the Discovery Channel folks and all that kind of good stuff out there. And let's see the chart here. Oh, it's been an interesting year for DISCA. Started off the year not too far from where it is right now, about 26.60 or so pretty much almost unched. Then it got dropped down in November to about 15.99. So not a good run there for DISCA. Then kind of rallied back up during earnings, up to about 26, about back where it is right now. Selling off a little bit again, 21, and recently back up to about 28.5, and kind of settling right now at near the upper portion of that range, right around 26.69. So Mr. Rock Lobster, you can see how maybe someone might be interested in a bullish risk reversal given this recent development, even though we are kind of on we're threatening the upper band of that range. So first off, are you buying this? This is a bullish risk reversal. I think maybe it's something else. And then B, what do you think about it here in Discovery Inc?
I think this is more bullish risky on the pricing alone. But it doesn't look like an unreasonable trade. They're buying out of the money calls, but they just don't want to pay a lot for them. So I still think it's anytime anybody buys out of the money calls with a month to go, it's certainly bullish. So they're trying to buy the earnings as well. So the only thing I think of is they're looking for something. They're looking for some Mac Daddy earning announcement out of Discovery. Don't they own the Animal Channel too, Discovery? I don't know.
They own a bunch of stuff. They own a bunch of websites now. They had one on a buying spree a while ago.
Anyway, maybe that's what they're looking for. But, anytime they're spending out of the money dollars generally means something. So we will see how much that means.
We shall see. Are you saying we have to put this in the to be watched category? Is that what you're telling me right here? All right.
It is. It's a little punt on earnings.
We got so many trades to watch here, sir. But I'll add this just because you asked so nicely. All right. As we keep on rolling here, no more bullish risk reversals, I don't think, Mr. Rock Lobster. We might have some other closing/rolling weirdness to come up here. Next up here, Omnicom Group Inc. I believe this is the newcomer to the odd block. If it's not, we haven't talked about them in quite some time. Ticker symbol OMC, closing today $69.61, off about not quite a buck, or about 1.5%. This name that does about 3,300 contracts a day, so decent odd block paper. Today doing 28,000. If you wonder what the heck this one is, they're a holding company. That tells you all. No, I'm just kidding. They're a holding company that provides advertising, marketing, and corporate communications services. So there you go. They run CRMs and a bunch of other stuff to various sectors, such as food and beverage. So there you go. That says it all for what Omnicom Group Inc. does. Let's look here. What caught our eye out here looks like a bit of actually kind of several verticals going up. First off, earlier in the morning, we saw the 72.5, 75 verticals going up. Looks like maybe a bit of a 1x2 coming in on the near the offer, 80, lifting the offer actually on the 72 halves, 3,359 times for 85 cents. Coming in on the bid, 6,718 times for the AUG 75s, doing that for 29 cents. Both of those, by the way, opening. Then we'll move on here to, let's see, the AUG 72 halves going up later in the day as well as part of another vertical, AUG 72 half, 77 half vertical also going up 5,000 by 7,500 times this time. Lifting offers on the AUGs at 72 halves again for 89 cents and coming in crushing, actually going up below the bid on the 77 halves for 16 cents. So a bit of a funky ratio on these two verticals. And total paper up here, we got a total on the day of 9,200 of the 72 halves, 8,000 of the 75s, 9,300 of the 77 halves. Worth noting, there's about 15,000 contracts open on the 77 halves. The other two, not much at all. If you dig back in a little bit to the OI, you'll see the 77 halves. 5,000 traded back on the 5th of July for prices somewhere around $1.70 or so. Then 9,000 more traded on the 17th of July as well for a wide range. The options traded between $0.10 and 50 cents that day. So somewhere in that range. Either way, different from today's 16-cent prices. So it would be interesting if they were kind of rolling those down now. Again, we are 69, 61, so we are a long way from that 77 half strike. So maybe he's taking the opportunity to take off the 77 halves and instead roll into a 72 half, 75 vertical. If he's doing that, we often look at those and say, maybe you should get yourself a little bit more time as well, but they're not, and that's the case. They're not doing that here. Either way, a lot of funky paper going up out here. Let's pull up a chart and see how the year has been out here in OMC. Kicking off the year, or at least for us, a year ago, calendar-wise, right around 80.5 or so. So substantially higher than where it is now. Traded all the way down to pretty much a little bit shy of where it is now, 65 and change back in November before popping back up, getting up to, looks like about 80 and change and kind of vacillating around the 75 level before dropping again right now down to about 69 and change. So it's kind of been a topsy-turvy year here for OMC. Mr. Rock Lobster, what are you feeling here? You feeling that they're maybe coming to close the 77 halves and roll into a vertical instead, or are they piling on? I mean, the 77 halves weren't open too long ago, a couple of weeks ago for most of that paper. So what's your spidey sense telling you here?
A little back, Omnicom was one of the first stocks I ever put an order in many, many moons ago as a clerk on the P Coast. Wow,
I didn't know they allowed orders via Dinosaur in Omnicom.
Yeah, I think as if it's the same Omnicom, which is the advertising group, the big advertising conglomerate. Did you ride your Flintstone vehicle with your feet all the way out to the reporting booth to carve your order in a stone tablet and hand it to the Dinosaur to process? Exactly, 1991 or 1990, I think it was a long time ago. So what are they doing here? My gosh, there seems like they're just doing more of the same, but they're putting a little bit of a spin on all this stuff, like a little ratio action. It feels like they're changing stuff up a little bit, but still aggressively kind of selling that downside. And the trades went up, but at like the 72, 77 slight ratio. I just think it to me it looks like they want to get long. They're trying to look for lower risk, but ultimately out of the money call spreads on both these things. So I can't. What the heck do you do with it? Somebody's looking for some pretty darn good earnings in this cycle. That's how it appears to me. I mean, there's definitely a little bit of open interest on some of this stuff, but for the most part, I'm not sure. I guess we'd have to look on those 77 and a halves, but there's definitely buying on those lower strikes. So, they're closing out some of their longs maybe and rolling into something closer to the money. I guess that's possible. They're a little grumpy after after the earnings announcement that they could be hung with all that stuff. So, holy gosh. I think somebody is rolling a trade for some more leverage, Mr. Longo, or at least let's see, they're buying those in. So yeah, I guess they're just hung on the 75s and 77 and a halves, and they want to roll closer to the money. That's kind of how it looks.
Does have that feel. They kind of got in maybe a little bit too aggressive on the 77.5s. Now they're kind of trimming that back and moving on. People always ask, by the way, where we get all these execution data. We use a bunch of different platforms. I'm using LiveVol right now, but it kind of just crashed on me. So demerits for them. But also when I look at the execution stuff, I look at the Flowmaster stuff. Mr. Henry Schwartz, head on over tradealert.com or optionalert.com. You can get that data, a lot of it at least, for yourselves as well. So you can see how these things go up on the spreads, which is helpful when you're doing all this kind of analysis, as we are wont to do here. One final time in the odd block today, at least. Let's go and wrap it up here with Hanesbrands Inc., ticker symbol HBI, closing today 22. Oh, it's crashing on me again. What's going on? Cboe not paying their bandwidth bill today, I think, for the old LiveVol Pro here. Closing today, $22.24. Easy for me to say since I can't pull up the underlying. But what we saw out there in HBI, I'll get you your stats in a second, listeners, once it resumes up on me there. Here we go, HBI. All right. Closing today, 22.20, up about 1.3% or about 28 cents. This is the name that does about 5,300 contracts a day. Today doing 27,000, 50 to 1 calls over puts. And so we're going to look at all those puts, all 531 of them today. Nope. Of course, I'm kidding. We're going to look at the calls. It was kind of a bit of a call palooza here in August. We saw some of it, but even more went up after. It was indeed, what caught our eye was kind of a call three-way. Call it what you will out here. It was the AUG 23s all going up around close to 1 o'clock today here Eastern. 23s going up for 60 cents, 6,000 times. Again, all mid-market for the most part. 24s going up for 30 cents, also 6,000 times. Again, also exactly mid-market. And then the 25s going up, maybe a bit of a kicker there. Going up for 11 cents right off the bid. So maybe someone doing a bit of a stupid with a call kicker up top there on the 25s. Also worth noting later on in the day, 22,000 of the 22s also went up today. Also worth noting as well, there's decent OI, but not enough to cover this volume on all the strikes, 1,300 to 1,100 on all of those strikes pretty much I'm talking about here. So it looks like it may have the feel of a stupid with the call kicker. The interesting thing is if it was a stupid or even a vertical, you expect to see maybe a bit of a ratio on some of that, but you're not seeing that here. It's all straight up 1-to-1. Worth noting as well about, actually it was a little bit of a ratio later on in the day because total on the 25s was up nearly 9,000. So they did do maybe an extra 3,000 or so on the 25. So that would maybe come back in to reinforce my notion that is perhaps the call kicker leg of this funky three-way. Let's go look at the chart here and see what was up here for the year in Hanesbrands. A year ago, they're pretty much right where they were right now. They're about 22.70, a little bit north of where they are now, 50 odd cents. They got as high as about close to 26, 25.73 back in September of last year. Then they kind of sold off hard all the way down to 16.5 back in May of this year, just a couple of months ago. Then they've kind of been on the rebound ever since, looks like, getting back up to right about where they are now, about 22. So it's kind of been another topsy-turvy year. You can maybe see Mr. Rock Lobster, while someone might want this kind of funky, stupid, maybe with the call kicker. If it's a vertical, why are you doing the 6,000 on the upside? Is all sorts of interesting funkiness to be had here, sir. What's your spidey sense telling you? Are you feeling a stupid with a somewhat ratio, 1.5 ratio call kicker on the upside as well, or are you feeling something else entirely, sir?
I don't know. Is Michael Jordan still a spokesman for Hanes underwear?
He'll sell whatever the hell you want him to sell. So he probably would be if they would let him.
I just saw he's worth like $1 billion or something. So
you got some batteries or underwear or minivans you need him to sell. He's your guy.
He definitely can sell stuff. So this is, again, another interesting, funky trade. It's almost like with the market at this level, people are trying to invent some really, to me though, I have to go with this one. And like, this is just looking like, can you buy I don't think it's like a stupid per se, but it's do you remember a Christmas tree trade in an index like the SPX where somebody would buy like a 23 and then they'd sell like a 4 or 5, I'll buy this strike and then I'll sell the 2 others. This to me seems like a Christmas tree.
A reverse tree.
Although why you create a tree on 3 handles is not I guess, it could create a really cheap 23 call. Hanes, it's not like it's a massive growth stock or anything. But I guess everybody runs out of underwear after it goes through the wash enough. So, but be that as it may, it feels like kind of a Christmas tree to me type trade. Buy one, sell the next and the next type. So
that's another thing.
It is. It's Christmas. It's Christmas in Hanes land.
It looks tree, but you're right. It's so tight. It's like, you just really love your broker at this point. You want to give your broker an early Christmas present. Christmas in July, so I'm going to throw 18,000 contracts through this nonsense.
And I think that's the theme for the 2 odd blocks.
Yes, there has been a lot of loving people's brokers this year. So brokers, tune in.
It's July and it's Christmas is coming early for everybody. Where's Tubby when we need him?
I know all the institutional brokers.
Where are these customers?
All the institutional brokers should be totally all over this segment sponsoring it because we're just talking about how much love they're getting here. It's 18,000 lots going up here and all this other nonsense for not a lot to show for. You know what we do have a lot to show for? It's the strategy block. Your votes are in. Your votes are in. You have chosen. Let us proceed now to see what you've got. It's time for the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the strategy block.
All right, everybody. It's Thursday. It's the time for Uncle Mike to hold court on some options topic, usually chosen by you. He was kind enough to give you guys 4 choices. One not so options related, so really 3. So he gave you 4 choices this week. He said Theta versus Vega, options pairs versus stock pairs, synthetics, just the overall rubric umbrella of synthetics, or WWE and AWA champs of the 80s. A nice breakdown of their title lineage all the way through. I could just listen to 20 minutes on Hacksaw myself, but I digress. We got to go on. And looks like a resounding voting here, Uncle Mike. 50% saying they want the options pairs versus stock pairs. 25% coming in for Theta versus Vega, and the other 2 kind of tied. 13%. You got synthetics to get 13% of the votes, sir. That's impressive in and of itself. And only 12% for the wrestling champs of the 80s. I'm surprised.
I have to say, I am saddened by the fact that we didn't get more people that were pulling for the wrestling champs of the 80s.
If you were on Twitter, you could go in and game the voting yourself, but you're not in the 21st century, sir.
Oh man, I got it. Well, I'm back in the 80s watching pro wrestling in the 80s. That's where I'm at.
I can't blame you. That is pretty awesome.
So, but all right. Well, let's talk about some option strategies here. Let's talk about options pairing and stock pairing. So first off, what is stock pairing? Classic example, let's just do this from a stock example to start with. You believe that Home Depot is going to perform better than Lowe's, or you believe that 2 companies that are similar and that they're competitors, that one of them is going to do better than the other. So what you could do if you think that Home Depot is going to perform better than Lowe's over a certain time frame, you could buy 100 shares of Home Depot and short 100 shares of Lowe's, let's say. Now, with that being said, let's say that both stocks go higher. And both stocks go higher. Well, of course, you're going to lose money on Lowe's, but you're going to gain money on Home Depot. And if Home Depot does indeed outperform Lowe's, then you'll end up making money on the deal. So let's say that you're doing this, and not necessarily 100 shares, but let's say you're doing it in a similar dollar amounts because the pricing of the stocks isn't similar. So let's say you just put down $5,000 long on Home Depot and then the equivalent short amount on Lowe's. With that being done, if Home Depot goes up more than Lowe's does, then you're ultimately going to be ahead on the trade because of the fact that you were long Home Depot and short Lowe's, and Home Depot outperformed, so that's how you would end up making money on the trade overall. Now, there's something to be said for that, in that the advantage of doing something like that is that if you're correct on the matchup, on the pair, so to speak, then you're going to ultimately be ahead. But if it's one to where you're not going to make as much money as if you would have just put all of your money into Home Depot in the first place, for example. So whether that's a good strategy or a bad strategy, I'll leave that up to the audience to decide. But that's a general concept of how it would work to the upside. Now, to the downside, let's say both stocks went down, and if Home Depot is still going to outperform Lowe's, then let's say Lowe's goes down 20%, but Home Depot only goes down 15%. you're going to make money as well, because Home Depot outperformed Lowe's by going down a lesser amount than what Lowe's did. So because of that, you were short Lowe's. You ended up making more money, and you'll ultimately be profitable to the downside because you were short that as well. So with that being said, how can that actually be attainable in the option world? Well, you can have a little bit, as with anything, you can have a lot more fun when you bring options into the mix. So years ago, a strategy that I used to do is I had a sector trading strategy to where I would invest in, I'd either be overweight or underweight, or I do have various indicators with which I would invest in all of the XL ETFs, XLE, XLU, XLK, and I'd be overweight or underweight or evenly weighted with the market, just kind of depending on what my sentiment was at the time. And this was, over almost 10 years ago that I was doing this. And with it, what I would do on it would be buy options from a pairing standpoint, and I would hedge them with S&P options, meaning that I would use, my concern was that if we had a market downturn, that it would be based on an entire market downturn, not necessarily a market downturn in the specific sector that I was in. So I would do kind of a pairs hedging strategy along those lines. Did it for a while, and then just as the years went by and things happened, we decided that we were going to move into a more, it wasn't exactly from one thing to the other, but we eventually decided that the best way of doing such a thing was that we started hedging the strategic night. The strategic night is the RCM portfolio, and I am still a part of RCM, even though I am St. Charles Wealth Management. They are still the people that sign my paychecks and are still the ones that run my compliance and are the ones that are responsible for me, basically, from a regulatory standpoint. But with that being said, a portfolio with which we work together on, George, Chris, Tim, the boys over at RCM, they pick a bunch of stocks. And they've performed very well through the last few years. For more information on it, feel free to contact me on it. But a way with which we're using an option pairing strategy on that is that we also have what we refer to as the hedged strategic night. And within the hedged strategic night, we own the same stocks as we would in the strategic night, only we keep a little bit of money set aside with which we're running various hedges on the S&P 500. So we've done put spreads, we've done long puts, we've done short call spreads. We've done quite a wide variety of things, and we still continue to do so. But that's another way with which we use option pairing in something with which we do. Now, another way with which you can do pairing strategies is that, let's say that you feel that volatility is higher in one stock and lower in another stock from the standpoint of the volatility within the options. Well, perhaps you could go long premium in the one stock and short premium in the other stock, and you would actually have the ability to capture some higher volatility. Now, with that being said, that's something that I've never ventured into, but it is something that can be done. Let's say that all of a sudden someone put in a big buy order to buy a bunch of options on XYZ stock, driving the volatility higher. Whereas on a similar stock that almost moves the exact same as this other stock, there's not that many buy orders on the option, so vol is lower. Perhaps buy options on the lower vol stock, sell them on the higher vol stock. Now, keep in mind, when doing that, if volatility is higher, it's typically higher for a reason. It doesn't necessarily mean it's going to continue to work that way, but it is something with which you can look for, and it's another way that you can consider the strategy of pairing. So that is it for today in talking about option pairing versus stock pairing strategies. Hopefully next week, maybe we'll get to talk more about some 80s professional wrestling and how we actually had the golden age back in the early 80s. And as it went on to a lot of the AWA heroes went over to the WWF, and the history that was made in the 1980s in the professional wrestling world. Maybe next week.
I look forward to it, sir. Meanwhile, though, we got to keep on rolling, see if we can squeeze in a little bit of the old mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block. You guys know the drill. You ask us questions. Sometimes we turn the tables on you, ask you guys questions. Actually, a couple this week, actually. In addition to the Uncle Mike little flash poll there, we got a Vol Flash poll up there right now. It's pretty quick. It's only going to be up there for about less than a day or so. So get up there, get your votes in if you haven't already. We asked you, hey, you know, Rock Lop's got all of his crazy VIX zones, -6, all that good stuff. VXX has the erosion zone, which is kind of in all the time, which a lot of people like. A lot of short vol traders really like that, and they're waiting for that moment when it breaks the 30 handle. It's hovering right around, was threatening it, then it got back today, I think, a little bit north of that. Where did we close out today? 31.19 in VXX land. So hovering, threatening, ever threatening that 30 handle. When do you guys think it's finally going to break it? It's going to do it this week, ending Friday the 20th. By next Friday, next week, the 27th, so sometime next week. The week following that, so Friday the 3rd. Or you say, never, I'm a long vol bull. The hell with you guys and all your VXX erosion. Mr. Rocklops, this one's right up your alley. When's your vote, sir? And more importantly, when do you think our audience is voting for? Oh, no, he's fallen into the cone of silence. Mr. Rock.
I did.
Get your Maxwell Smart shoe out of your face.
Tusaw's on a roll, and I don't like interrupting him and all that kind of stuff.
How considerate. Breaking
the 30 handle, well, for me, it's kind of I don't know. I think it's going to be below the 27th. I think that's what the crazies are going to say as well.
So sometime next week. Interesting.
Our listeners, yes.
Mr. Uncle Mike, do you want to vote on this one, or you want to just punt?
It is 4th and long. I'm calling the punt team on this one. I'm not getting into something that I yield to experts such as the boys at the option pit on.
Well, so far our audience is with the Rock Lobster here. They're saying next week is the big day, Mr. Rock Lobster. Breaking the 50% so far, saying by next Friday the 27th, we will be below a 30 handle in VXX. 30% saying hell with you. I'm long vol. Never shall it break the 30 handle. So got some vol bulls out there, 10% for the rest. Our real question of the week, actually, this week, that's kind of more just a fun, silly one. We'll discuss it more on vol views tomorrow, obviously. Our real question of the week this week is, earnings season is back. You guys love yourselves some earnings season. So we got a nice, simple one this week. We said, which names do you think are really going to dominate your options trading this season? We gave you 4 choices, but you guys always have your write-in options. Gave you the old Widowmaker Netflix, the old dominant force Amazon, the old crazy land of hyperbole, a.k.a. Tesla, or the Googs. Kind of rounding out some of those, pretty much almost all 3 of those 4 are those 5 big names I just mentioned in that chart from earlier. Let's go back around the horn. Uncle Mike, we'll start with you. Which of these 4 do you feel if you had to trade one, you'd be trading? And I know they're a little bit high-flying for your taste. And then B, more importantly, what do you think our audience is picking?
I'm sticking to what I said the other day. I am going with Googs and Googs and more Googs.
Interesting. You guys are feeling the Googs love here. Mr. Rock Lobster, are you still feeling the Googs/Alphabet love, or have you changed your mind, sir?
I'm not. I haven't changed my mind, and the reason is because I think the last cycle was a little disappointing for Google. They always do this thing where they say, we're going to spend a lot of money, and everybody sells it. It's below $1,000 or whatever, and then they don't spend more money after that, and they have crazy earnings. So I'm still going Goog. I'm not changing the Goog.
Not changing the Goog. Well, the audience is saying the heck with both of you. They're going pure Amazon. Maybe a little recency bias. They're 44% right now saying they're going to be trading up the Amazon. Prime Day, the shutdown, all that stuff. Driving Amazon paper. 22% saying Tesla, and then a tie for third, 17% each, Netflix and the Googs. So not a lot of love for Googs. You got about a day or 2 left on that poll if you haven't played already. By the way, going back to our older question about the Vol Flash Poll. I can't read this guy's handle because it's not exactly family friendly. Let's just call him Boot the Wilpons. I guess that's also his handle. The rest I cannot read. But he says his answer is the week ending the 3rd of August, which will be the low for the move, a.k.a. short the market, go long vol. So he's saying it's going to break to the south, Mr. Rock Lobster, right around the 3rd, break the 30 handle, then immediately reverse. Are you buying what he's selling? Obviously, he's a vol bull, sir.
He could. I just kind of paired QQQ and VXX today, so there's no way. There's no way the vol's going higher.
That's it. You're done.
It's not. I'd make too much money, so it ain't gonna happen.
So that's your vol hedge against the VXX. You like yourself some Qs?
Yes, like a long right now, long QQQ puts, long VXX puts.
Interesting, sir. We shall continue the discussion. Unfortunately, we're out of time for your questions. We'll do more of your questions on the Monday mail block. Don't you worry. Meanwhile, it's time for us to wrap the whole thing up with our final segment. It's time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, welcome to Around the Block. This is indeed the portion of the show where we break down what we're watching for the rest of this week into the weekend. Remember, we touched on Softy earlier in the show. They were pricing in, where was it again? $3.70, right about 3.5%. They closed right around 104.70. Right now in the after hours, they're trading pretty much 105. Actually 104.40, and they closed. They're up about 60 cents to 105. So about 0.5% move on the upside. So maybe, I don't know. Mr. Rock Lobster, are we back to the resounding meh days of Softy in the after hours? Or I know you've been a big Softy lover for a while here. Is this you thinking this is just the calm before the storm? Next cycle they're going to blow the doors off again?
You know what? It's really weird. I actually closed all my Microsoft juice at like 2:30 today. We got a crazy move. I took all my money and I didn't want to mess with it. I'm still long the stock. It's probably one of my biggest holdings. So I still pretty bullish. I think they're doing great in cloud, and they've somehow managed to move right away from Windows. That CEO, whoever picked him, was pretty damn smart because he's done a really good job. So as far as Microsoft goes, but on the earnings front too, I'm actually looking to see if GE could, because I like buying sort of the out of favor stuff, and I'm looking to see if there's actually anything left of General Electric since the heady days. So, and those earnings are tomorrow. But as far as Microsoft goes, I still like it. It's just it's actually now at a multiple where they have to make money to keep the stock going. So it's probably. I don't know. I think it's probably like a time spready or kind of sell some put spreads, something like that. But I don't know if there's the same go-go upside that we've had in just like, let's just say the last 4 or 5 years.
Yeah, I mean, it was at $70 back about a year ago. It's now 104 today. So, it's done pretty well for itself. But it was for a long time, for like a decade, it was kind of dead money, at least from an options premium perspective. You could write it. It would kind of just shrug its shoulders every cycle, and you could keep most of what you collected in your premium harvest, and you do it again next cycle. You didn't get a ton for it, but you kept most of what you sold, so it was kind of a nice thing. These days, not so much. Maybe this cycle notwithstanding. Maybe we are getting back to the old days of Softy. We shall see. Meanwhile, Mr. Uncle Mike, sir, what's on your radar for the rest of the week into the weekend?
Well, still, of course, watching the rest of the earnings announcements that are coming out, watching everything macro, and we're getting pretty close to all-time highs again. I might be able to say my trademark statement either Monday or Thursday next week. Looking forward to the possibility. Also, within all these earnings coming up, and we got 2 weeks till non-farms, so keep that on the radar as well.
Also, keep us on your radar, because we're leaving now. That's what that music means anyway. But we'll be back again soon. Don't cry. Don't be sad. I know we got some TWIFO today. A little bit of an early TWIFO gift for you this week. We're thinking about moving TWIFO every week to Thursday at that time. Same time, 1:30, just moving it to Thursday. It seems to work better for everyone's schedules. And also, it's good for you guys because you listen to the podcast. You get it on Friday rather than Monday, so you still get it for that week, which is still kind of nice. So look forward to maybe TWIFOs going forward on Thursday. OB for now, kind of staying where it is, but Uncle Mike wants to move it, so send him your angry email. But maybe we might be doing it earlier. If you like this time, let us know, or because it's been this time kind of forever. Or if you're okay with maybe an earlier time with TWIFO at 1:30, we can't really do OB at this time, so it'd have to be more like noon. Let us know what your thoughts on that. You like listening to the show maybe around lunch hour if you listen live. Listen to the podcast, doesn't matter to you. You get it whenever, so you're happy either way. But if you have a thought on that, let us know. Hit us up. Meanwhile, though, let's go back around the horn one last time. Check in with everybody. See what they got going on that may interest you. We'll start with you, Uncle Mike. If I'm interested in going to St. Charles, A, and then B, learning a little bit about wealth management, B, where should I go? What should I do?
By all means, visit my website at stcharleswealth.com or shoot me an email at mtosaw@stcharleswealth.com. In the coming months, we are going to have an interest rate alternative seminar here at the office. Probably not for another month or so. Want to let the kids get back to school and let people enjoy their summers, but a lot of exciting things to come this fall. Keep in touch.
There you go, stcharleswealth.com to learn more. Maybe you want to sling some slick silver conversions in your own account. Get that nice 3%, baby. Head on over. Uncle Mike will show you how to do just that. Last but not least, Mr. Rock Lobster, if I'm into such things as the VXX erosion zone, that could be a new thing. Maybe you want to borrow that and license that to me. You got your VIX zones. How's that VXX erosion zone sound?
VXX erosion zone. You can get that at VIX Made Easy. You can go to our store and buy that. You can buy VIX Made Easy. All of our vol courses, any one of our courses will save you a multiple of what they cost. So I suggest you take them. Also, fixing terrible trades will be our webinar on the 29th, and it will help you fix terrible trades. So you go to the Option Pit website, click our next webinar, and you will do some learning.
You know what we need? We need like a nice VXX erosion like indicator. Like, there's a skew index. A VXX erosion index would be nice. Someone goes out there, looks at the term structure, whips it up. Today it's at a 6. Oh, maybe you can stay away from it. Oh no, it's at a 10 now. It's eroding. Get in there. So maybe something like that. How about a nice little? You get your weather report, get your VXX erosion report. How's that sound? See, I'm giving you guys just money ideas all the time.
I wouldn't know what to do without you, Mr. Longhill.
You'd have much more free time in the day because you wouldn't be talking all the time. All right, head on over optionpit.com to learn more. And on behalf of the Rock Lobster, Uncle Mike, and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, all the fun stuff that you do, listening live, sending in questions. Keep it all coming. No TWIFO tomorrow, but there will be vol views, so stay tuned for the normal time for that, noon Central, 1 p.m. Eastern. Otherwise, we'll see you back here next week for more of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.